Hey, this is CatsMeow492. Today we are analyzing a stock called VIRT. I post TA on Wall Street Bets a lot, and I have a lot of questions about how I approach TA, so I figured I'd answer them all at once through a video. Anyways, the idea for VIRT came from Makepeace12 on Wall Street Bets. He seems to think it's going to the moon, and we're going to do our own due diligence on that. So the first step I usually do when I go about TA is to find what I call the boomer metrics. And the boomer metrics are the real, fundamental old school way of analyzing stocks that's basically meaningless these days. But they provide useful supports, and you get an idea of what other less, what's the word for it, nuanced investors might be thinking. So my first step is usually to look at the book value. So I have the book value up over here. The book value is $6.43, book value per share. The book value per share is basically if the company liquidated everything right now and got what it estimated all its assets to be worth, what it could pay out per share to all of its investors. Basically, in the case of bankruptcy today. So it's 643. You can see I plotted on this chart. I actually plotted 661, but it's not really that important. We're way over book value per share anyway. So that's a area of major support. I wouldn't expect the stock to go under that. Let's see. The next step is just kind of to check the news to see if anything significant came up. It looks like they have an earnings call on May 7th that's way off. It shouldn't be affecting anything. I don't see any news of mergers or any shit like that. It doesn't look like they've released any new and exciting products, so I'm really not sure what's going on with this company. Someone suggested it, so I'm not even entirely sure what this company does. Let's see. Let's look at the profile to get an idea of why they would be going up in a down market. It's very strange. It's just financial services. Market making and liquidity services. So I can see why in times of very high volatility in markets, market makers might be making more money. So that makes a little bit of sense as to why the sudden rise. Basically, the relationship here is their stock price trends with volatility. More volatility, more demand for market makers, more money for them. All right, so once I actually get into the TA of things and get away from the fundamentals, I like to start off on the longer charts. I usually start off on monthly and work my way down. Monthly really isn't that useful because I'm normally trading on 1 hour and 30-minute windows. Plus things, I don't know, I'm not a monthly trader at all. I'm not gonna fucking buy and hold a stock for 2 years and hope it goes up. But you can see in the monthly, they are actually coming out of a big downtrend here. The Arun is still signaling sell, but it's starting to reverse a little bit. The MACD is still diverging bearish, and I'll explain what the MACD is in just a sec. But it is converging, and it looks like it's about to diverge bullish. So on the week window, we have a whole different story. The Arun has just reversed, and basically how the Arun works is you're going to have two lines here. One is the buy signaler, and the other is the sell signaler. It's a buy signal when this blue line is above this red line. It's a sell signal when the red line is above the blue line. The Arun is a really great indicator for beginners because it's kind of binary. It's either buy or sell. This blue line is either above this red line or it's not. The MACD is a momentum indicator. I think it stands for moving average convergence divergence. So if you know what a moving average is, it's the divergence or convergence between a slow moving average and a long moving average. And I'm not sure what I have it. I have it set to 12, 26, and 9. So I believe that means my long moving average is 26, my short moving average is 9. When the fast moving average, the 9 moving average, is above the slow moving average, the 26, that's a bullish signal. When the reverse is true, that's a bearish signal. And these little bars in between are basically measuring the total divergence, or if you've taken calculus, the integral between the two moving averages. So the rune is a lot easier to use. The MACD gives more information. And so we've definitely identified that it's a bullish trend here. On the daily and weekly, we have bullish trends, which is perfect for the interval I trade in. I trade on 1 hour and 30 minutes. Basically, as is a principle, I don't trade against larger trends. So if I think a stock is bullish on larger intervals, I'm not going to go short, or I'm not going to buy puts. I feel like that's just pissing against the wind, and sooner or later it's just going to blow back at you. So the next step here, now that we've identified the trend, is to try to figure out good entry and exit points. And with stocks in the middle of big swings like this, typically I think of a golden mean based analysis. If you don't know what a golden mean is, Google it real quick. It's something that exists in nature everywhere. I find it exists in markets quite a bit too. Basically, there's kind of this ratio. Yeah, there's this ratio that exists everywhere in nature, and you'll find it very useful for finding take profit and stop loss points in markets. So I don't know why they call it Fibonacci retracement, but it's basically golden mean retracement. So we're going to do Fibonacci retracement between the lowest point before this peak, because that is the biggest peak in recent history. So our Fibonacci is actually not giving us a ton of useful information here. There was once some economics teacher who said that essentially all models are wrong, some models are useful. Sometimes you try something on these charts and they're just not useful. Sometimes that happens with golden mean based analysis. A lot of times that just means there's a larger trend at work that hasn't quite played itself out yet, because you're always basing this off the biggest wave and then you're just chasing the smaller waves thereafter. So this is far from a perfect retracement. I can't even really think of a way that this retracement would fit. We can try it one other way and see if we can get any other useful information out of it. We'll do it between this peak and this valley. So this is a little bit more useful, but it still doesn't make a ton of sense. So we're going to scrap the Fibonacci retracement and go for volume-based analytics. When you're looking at volume-based analytics, you're basically looking at the periods of very high volume and mapping them as support and resistances. And you can see this actually traces really well with what's going on. So I'm going to mark them on the chart so you can see. All right, so you see this area where the volume, the buy volume spikes a ton. We are going to plot that as a major point of contention. You can see right now these red bars happened almost exactly where this historic volume spiked. So we'll put some text up there. I'm going to switch these over to red so they're a little bit more visible. Now we're going to go back and check where we've seen a lot of volume in the past again. So this has probably been the peak volume for the stock, this sell-off right here. So we have our major resistances. drawing horizontal line. All right. So basically, thoughts at this point are we've hit an area of very high resistance, and that's showing in the market price. But the stock hasn't really given up. You can see from the MACD in the Arune's just giving a buy signal. The MACD is still showing very bullish signals. Not only is it showing bullish signals, it's showing increasing divergence. So it is really trying to break through right now. My concern is on shorter intervals, we might be able to find a better entry than we're at right now. Just from my experience in looking at stocks, I can see this kind of leveling off and basically building a channel around this resistance for a little while before it rises, and then it's going to hit 29.93, and it's going to do the exact same thing. So when we find entries, I can only really explain it right now. I can't really show you because the market's not trading. I'm going to the 1 hour 30-minute chart, and I'm going to look at the RSI to see if I have potential entries. If you don't know what the RSI is, it's the Relative Strength Index, and it's a really good measure of how overbought and oversold the market is. When the RSI is 35 and under, it's decisively oversold. When it's 75 and over, it's decisively overbought. So we're at about 70 right now, you can see down here. That's not really a good entry. We're at 56 on this one. Like I said, I trade on 1 hour and 30 minutes. So usually I'm taking the average of the 1 hour RSI and the 30-minute RSI and deciding whether or not it's a good entry. And on the 30-minute, it's a neutral entry. On the 1 hour, it's a bad entry. So I don't see myself getting into the stock right now. I would like to see it downtrend a little bit more, probably to where this super trend indicator is, or probably a 50 moving average. So let's plot a 50 moving average right now. All right. So I would like to see it around 22 to $21.50 before I find an entry. And we are doing that because we generally want to find the lowest possible price within a trend before we commit to a buy. And I think that's about it for me to write my analysis on the stock. It's looking bullish based on the Arun and the MACD. I think it'll continue to be bullish. The daily and weekly both agree. The monthly even looks like it's going for a reversal, so it could double dip down, but I think we can say decisively that the daily and weekly chart will be bullish for at least another 2 weeks, which allows me to trade on the 1 hour and 30-minute chart, because like I said earlier, I don't want to be pissing in the wind. And I'm going to go ahead and write my analysis. Thanks for watching.